What happens when you take $10,000 and add just $5 a day to it, then run it through the right mix of Fidelity ETFs? Bobby had the same question, and it all depends entirely on how the portfolio is built. With one particular strategy, the portfolio is projected to reach $467,257 and will be paying Bobby $2,048 every single month for life. With another portfolio strategy, using the same starting cash, the account will grow into a whopping $1,085,073 machine that will pay Bobby $1,637 every single month. In this video, I will show you and Bobby how a one-time $10,000 lump sum investment and a $5 a day commitment into 3 unique Fidelity ETFs can start the journey to financial freedom. If financial independence is one of your goals, this is the video you do not want to miss. And hey, if this is your first time visiting our channel, please subscribe and turn on your notifications so you don't miss our subsequent videos. Your support means a lot to us. Thank you. Welcome to Investments Mindset, where wealth builders come to get inspired. Before we continue, please note that we are not financial advisors. The content on this channel is for educational and informational purposes only. It is not intended to provide investment advice or recommendations regarding specific securities or investments. Always conduct your own research or consult a qualified financial professional before making any investment decision. Every investment involves risk. Let's dive in. So here's where Bobby starts. He looked across Fidelity's lineup and built this portfolio around 3 funds, with each playing a completely different role. One for high current income, one that blends income with real growth, and one built purely to compound. Every portfolio worth building needs those 3 jobs covered, and these are the funds that cover them the best. The first fund is the Fidelity Sustainable High Yield ETF, ticker symbol FSYD. This is the one built to pay Bobby the most. It holds high-yield corporate bonds, the kind issued by companies that pay more interest because they carry more risk. But FSYD only holds issuers that clear specific sustainability standards. So Bobby isn't just chasing the highest number on the page. He's chasing it through companies that have been screened for how they're run. FSYD currently yields 6.8%, with a 5-year dividend growth rate of 6.5% and an annual price movement of roughly 1.5%. That combination, sky-high yield plus real dividend growth, is what makes FSYD the income anchor of Bobby's portfolio. The second fund is the Fidelity Tactical Bond ETF, ticker symbol FTBD. This unique ETF is actively managed across a mix of investment-grade bonds, high-yield bonds, and emerging market debt, which means the managers can shift the portfolio toward whichever part of the bond market offers the best combination of income and price growth at any given time. FTBD yields 4.8% with a dividend growth rate of 5.5% and annual price appreciation of 3.5%. It sits right in the middle of this portfolio, part income, part growth, and that dual role is exactly why it earns a spot in both versions of what's coming next. The third fund is the Fidelity Blue Chip Growth ETF, ticker symbol FBCG. This fund is nothing like the other 2. It's an actively managed fund that hunts for large, well-established companies with above-average growth potential, the kind of names that dominate their industries and keep expanding earnings year after year. FBCG barely pays a dividend at all. Its current yield sits at just 0.04%, but that's not why Bobby added it. Over the last 5 years, FBCG has posted an annualized return near 15.7%, by far the strongest price growth of any fund in this video. A quick note on what that means. When a fund barely pays a dividend, virtually all of its return comes from the share price itself climbing over time. FBCG doesn't hand Bobby cash along the way. It reinvests everything back into the business growth of the companies it holds, and that's precisely the kind of engine a portfolio needs if the goal is to push towards 7 figures. So now we have our 3 funds: income, income with growth, and pure growth. But here's the part most people miss. Picking strong funds isn't actually the entire decision. What matters just as much is how much weight Bobby gives each one, because these same three funds can be combined two completely different ways. Tilt the weights toward the income funds, and the portfolio pays Bobby a serious check every single month. Tilt them toward FBCG, and the account compounds toward a number most people never see in their own account. Same $10,000 lump sum, same $5 a day, same three funds. The weighting is the strategy. Let's start with the version built to pay Bobby, the Income Now portfolio. The weights look like this. 70% goes into FSD, the high yield anchor. 20% goes into FBCG, kept just large enough to add real price growth underneath the income. And 10% goes into FTBD, rounding out the mix. Blend those three weights together, and the Income Now portfolio runs at a 5.26% blended yield, a 5.10% blended dividend growth rate, and 4.54% annual price appreciation. Here's how that's projected to play out for Bobby. After year one, the $10,000 lump sum, boosted by that daily $5, would be worth $12,887. After 10 years, with a total of $28,262 contributed along the way, projections show the account growing to $55,571. After 20 years, with $46,525 contributed, the account is projected to reach $171,638, and by year 30, with a total of $64,788 contributed out of pocket over 3 decades, the portfolio is projected to reach $467,257. But the account balance isn't actually the headline here. In year 30, the income portfolio is projected to generate $24,578 a year in dividends, which works out to $2,048, hitting Bobby's account every single month, whether the market is up, down, or sideways. Out of the $402,470, the portfolio will add roughly $216,019 from dividends compounding on themselves, and about $186,450 from the funds rising in price. This is why it is often said that time in the market will always beat trying to time the market. Before we continue, if you find value in this video, even just a little, please subscribe and hit the like button to help us continue to provide more insightful and educational videos. Your support is highly appreciated. Thank you. Now let's flip it completely. Let's dive into the compounding portfolio strategy. This portfolio is built for one purpose, and it is to push that $10,000 initial investment over $1 million. The weights shift hard. 70% now goes into FBCG, the growth engine. 15% goes into FTBD, still contributing both income and price growth. And 15% stays in FSYD, just enough to keep meaningful income in the picture. FBCG takes the largest slice by far because its 15.7% growth potential is the only thing in this lineup capable of doing what Bobby is asking it to do. With this weighting, the compounding portfolio runs at a 1.81% blended yield, far lower than the income version. But with the 11.74% annual price appreciation, the total blended return will be pushed to 13.55%. Here's what that looks like over time. After year one, the account would already be worth $13,292. After 10 years, with the same $28,262 contributed, the projection climbs to $72,281. After 20 years, with $46,525 contributed, the account is projected to reach $294,216. And by year 30, with the same $64,788 contributed out of pocket, the compounding portfolio is projected to reach $1,085,073, crossing 7 figures from a $10,000 starting point and $5 a day. Here's where it gets interesting. Of the $1,020,286, this portfolio adds on top of everything contributed about $883,997 comes purely from the funds appreciating in price, and only around $136,289 comes from dividends. That's almost the exact opposite of the Income Now portfolio, where dividends did most of the heavy lifting. And even with a yield this low, the sheer size of the account means Bobby still ends up with a real income stream along the way. By year 30, the compounding portfolio is still projected to pay $19,640 a year in dividends, or $1,637 a month, a smaller check than the income-focused version, but still enormous for money that started at $10,000. So now both versions are sitting side by side. Same 3 funds in both, same $10,000 starting point, same $5 a day, 30 years on the clock. The income portfolio is projected to reach $467,257 in the account, paying Bobby $2,048 a month for life. The compounding portfolio is projected to climb to $1,085,073, paying him $1,637 a month, from a balance well over double the size. Neither one is wrong. It depends entirely on what Bobby is actually optimizing for, but whichever direction Bobby leans, the story underneath both portfolios is the same. 3 funds, a $10,000 starting lump sum, and $5 a day, less than the cost of a coffee, are enough to build either a $2,048 monthly paycheck for life or a 7-figure account, depending purely on the portfolio strategy. The starting number was never the point. The decision he made with it was. Now listen, money doesn't need permission to grow. It just needs time, consistency, and the right vehicle behind it. Bobby didn't start with a fortune. He started with a decision, a small daily habit, and a handful of ETFs built by people who understand markets far better than any of us ever will. That's the real gift of index investing. You don't need to pick winners, time the market, or watch a ticker all day. You just need to start, stay consistent, and let compounding do what it's always done. Whatever your number is today, it's enough to begin. The only wrong move is waiting. Now, if you're serious about building real wealth, then consider this channel your financial gym. Every video is a workout for your portfolio, your mindset, and your money skills. If today's video helped you level up your financial education, even just a little, please smash that like button and subscribe so we can continue to grow and build wealth the smart way. Listen, if you want to know the 5 best Fidelity index funds to buy and hold for life, or the 5 best high-yield ETFs for monthly dividends with zero NAV erosion, check out the videos on your screen right now. Thank you, my friend.